The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk about taxes and money to get you ready for next year, to put last year behind you. Any notices or bills you're getting from the state or federal, and we want to help you. Our phone number here in the studio is 803-0930, 803-0930, star 930 on your cell phone, and I have Tiffany Fabian. Hey, Tiff.
Hey there, Esther. How's it going?
Wonderful. It's nice to be out of tax season.
Yes, yes.
And Christopher Fabian.
Hello, Esther.
Hey, Chris. You happy?
Am I happy? Yes. Yes. The sun is out. Why would I not be?
We've been busy ever since.
That's for sure. You know, I wanted to kind of have a theme. I try to have a theme for every Saturday. And it was kind of like, you know, obviously we're going to help people get ready for next year, but we want to deal with things that you have available right now, because people say to themselves, well, how can I make more money? How can I? And so I thought we'd talk about some of the things that are available right where you are that you need to take a look at, because it can make you money by just doing some tweaking. Mm-hmm. Right?
That's
so kind of like my theme was make money where the sun shines, and the sun shines really kind of right where you are.
That's right in front of you. Look to the right, look to the left. It's there. Just you have to do some little bit of work and accomplish it.
Right, and so the first part is your job.
Mm-hmm.
When you take a look at your job, do you have a pension plan available? Have you signed up? And if you haven't signed up, you should really be mad at yourself, because especially if there's an employer match. So like if you have a $40,000 salary and they do a 2% match, you're throwing away $800.
Yep.
Go get it done. I remember last tax season, at the end of last tax season, there was a young man. He had no idea how to go online and sign up for it. So I said, after tax season, come in, and we did it. So I got to see him this year, and we went over what's grown in his portfolio. And it was so cool to see him excited about, his 401k.
Well, there's a couple things that happen. So if you had a $40,000 salary and all you did was put in the 2%, you'd put in $800, they would match $800, right?
Mm-hmm.
Yep.
But the whole thing grows, your $800 grows tax deferred.
Right. It goes in now. You don't.
10% bracket, you're going to save $800. You're going to save $80 in taxes on the federal, like 25 on New York State. So you save $105 in taxes, plus the employer kicks in $800 tax deferred. So like you're $105, well, $95 ahead. So that is really important. So when you take a look at this, the whole thing of this program is, what can you do that really doesn't take much effort, but you have to get yourself off the dime to do it?
Yep, that's exactly right. I think Ed and John, who are holding, I think Ed's question revolved around that, it looked like.
All right, we're going to get there. Well, we may as well go to Ed since you tipped it off. So, hi, Ed. This is Esther Gulius. How can we help you?
Okay, I'm referring to what you were discussing briefly last week.
Yeah.
Just thought part of it about how some expenses are not deductible this year versus last year.
That's correct. And mostly, the itemized deductions are still deductible. However, because of the standard deduction, it's more difficult for people that are married filing a joint return to come up to that threshold. So charity's still deductible, medical still deductible, property taxes are still deductible, state and local income taxes, sales taxes capped at $10,000, mortgage interest is still deductible, home equity is still deductible as long as you're using it for home improvement. Casualty losses are still deductible. Gambling losses still deductible. However, the whole thing, if you're married filing a joint return, has to come up over $24,000. So that makes it more difficult for many people to use those itemized deductions.
What about something like, I think you mentioned employee expenses
Employee business expenses are completely gone.
are gone, but you said there was a way around it.
There is, and it was interesting. I met with a lady yesterday. She's an outside salesperson, and she's actually doing some window treatments in my house. And she said, "Oh, it's so disgusting. I put 20,000 miles a year in my car." And I said, "So become part of an accountable plan at your employer. Submit your expenses to your employer." And she says they won't pay it. And I said, "Okay, this is how you do it. You submit your expenses so they're around 10,000. Get a salary decrease of 10,000.
But that sounds so scary.
But you're still you're getting reimbursed 10,000. Your salary's down 10,000. It's still the same salary and reimbursement package. But the thing is, you're going to save FICA and income taxes on that $10,000 reimbursement. So you're still whole, but you won't be able to deduct them on a 2106. But you're actually better off to do it that way."
I see. Now, I have a relative who this may pertain to. Unfortunately, not unfortunately exactly, but he's part of a union. Now, the whole union would probably have to agree to negotiate that with an employer.
Well, and Chris, you talked about that with the Teamsters. We can't believe that the Teamsters
Right,
haven't caught on.
there's no unions yet opposing this
They
because
don't even know. I'm sure they don't know yet.
Yep, because union dues aren't even deductible.
Right. So the thing is, and at EG Tax, we're happy to come in and talk to your union and explain it. It's a really simple program, especially if you're a team over the road trucker, where you would have had were able to take your over the night expenses and some of the other expenses. Those are gone. And what's so interesting, if you were self-employed, it would be those same expenses would be deductible. But as an employee, they've specifically exempted that from being tax deductible.
It doesn't sound fair to me.
So if you want EG Tax to come, we will come talk to your union and explain how the whole thing works. Because in January, it's too late.
Or your employer, if you're not part of a
Right.
union. Yep.
Very well. This person is part of a union. So in other words, what you're saying is that you take a cut and pay equal to your expenses.
Right. And see, the thing is, when you did the 2106, you could only take everything over 2% of your adjusted gross income, and you still would have paid FICA on the whole amount that you weren't reimbursed. What we're suggesting is take a pay cut. The whole thing is not taxable, number one. You don't have to pay FICA on it, number two. And it's an accountable plan, so it's going to be completely not taxable, and you will end up smelling like a rose.
And your employer will be better off too.
And your employer will be happy too.
Because they don't have to pay as much FICA, SUDA, FUDA.
Right.
Thank you very much.
You're very welcome. If you need us, we will come talk to your employer. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And we're going to take a short break, and we're going to be back with your calls, John and Larry, on the other side of the break. We'll see you then. Hey, this is Cinco de Mayo. And are you sitting there with your pina colada? Is that a pina? Is a pina
Margarita?
colada?
A margarita,
Margarita,
pina
that's
colada,
it.
both of them work.
Yeah, that's right. It would not be good if I was with the margarita right now, right? Anyway, I'm Esther Golias, the tax lady from EG Tax, and we are here every Saturday from 3 to 4 to help you with your tax and financial kind of things. This time of year, we kind of move into financial things because taxes kind of touch everything, right?
They
With your
do.
money.
They do.
Every
You gotta know a little bit about everything.
Yep. Any time you turn around, there's taxes. So
That's right. And so we obviously, if you're in the 22% bracket federal, 7% New York State, you're looking at 30% of your money gone. So you want to make sure you can protect it. So if you have any questions, 8030930, 8030930, star 930, and we got John, who's been waiting. Hey, John, how can we help you, sir?
Well, I've got questions about the 2018 taxes.
Yeah.
I realize you mentioned that charitable, property and sales taxes, and medical remain the same.
Right.
Now, I understand that the standard deduction has been raised to $24,000.
Right.
What about that personal deductions of like for my wife and me,
Gone.
be a little over $4,000 each?
Gone.
Gone. Great.
Gone.
So they give us 24,000 and they take 8,000 back. Is that
Well,
it?
actually, if you're over 65, they took more than 8,000 back. But yeah, that's exactly right. So that's what we kept telling people, that they're giving you 24,000 on the left-hand side, but they're taking away 8 or 9,000 on the right-hand side. So, and you already had $13,000. So really, the benefit was only like $2,000. However, there is a tax rate cut across the board. So the only way you can really tell how you're going to work out for next year is our website has something to that effect, right, you guys?
Yeah, there's a calculator, Chris.
Yep, right on our website. It's a nice little calculator. Shows you plug in your earnings, your filing status, and it will show you what your tax will be
Up or down
from last year compared to this year.
And I found about 1/3 make out better, 1/3 make out worse, and 1/3 about stay the same is what
Right.
I've found.
Yeah.
Yeah.
So the best way to take a look at that is to go to the website and see how you work out your
Like last year, my tax rate ended up being 12%.
Okay. You'll probably drop to 10, so that would give you a 2% savings.
Right.
But of course, you're going to lose your personal exemption. And I don't know if you itemize or not. If you itemize, that'll be another negative against you. So just go to our website, egtax.com, and look at our calculator, and you'll be able to compute how you fare during the tax law.
And if
change.
you're over the age of 65, you still get that extra amount on your standard deduction, which is always good too. So.
Okay?
Wait a minute, what is that?
Well, when you're over the age of 65, they give you an extra standard deduction for you and your spouse.
An extra?
1,050, right, Chris?
1,250
250.
for a joint.
Yep.
1,250.
Yep.
Right.
So that
And-
makes it 5,
So that makes it more like 27.5.
27.5.
26.5
26.5
Without-
standard.
for going into 2018.
I don't know. I'm not quite sure.
In other words, you got your 24,000 plus the extra standard deduction for being over 65, which increases the 24,000 to a higher figure.
Oh, well, that still doesn't bother me because, my personal, my itemized deductions are about 33,000.
Oh,
Okay, but you see, you're
then-
one of the people that it's going to negatively affect
Yep,
because
yep.
you're
Salt.
you're not going to get as much benefit as you did before. Go to our website and take a look, okay, John?
Okay.
And give us a
Thank
call.
you, sir. Thanks for calling.
Because it's a really good question what people are raising, because they're probably adjusting his withholding tables, and so they're probably putting more in his pension or his wages because they know the tax rates have dropped. However, because he's in that 1/3 that'll negatively impact, they're taking too much and giving it to him where they shouldn't. So if he has any questions, he should give us a
Yeah,
buzz.
and that's why when you go to the website, you can calculate how much savings or negativity is going to affect you for next year. But especially if you were somebody that itemized, I think you're going to be very sad because you're not going to get as much bang for the buck.
Correct.
Yep.
Right.
And then there's New York. What are they going to do?
Then there's God knows what New York is going to do. And let's go to line 3, and we got Larry from Kenmore. Hey, Larry, how can we help you, sir?
Good afternoon.
Hi.
When I begin my withdrawal of my 401ks in a couple of years from now, can you tell me just what taxes that will be subject to?
Federal, and if you have no other pension plan on New York State, the first 20,000 is going to be tax-free on the New York State return, unless you're retiring under a New York State federal or municipal pension.
Okay, and there's no Social Security of any sort?
No,
not on New York. Social
No,
Security
no
can be
Social
taxable
Security
on the
pension.
federal.
right.
Okay, that answers my question, folks. Thanks.
All right.
But
thank you.
yeah, New York State is
you.
kind to retirees, and none of your Social Security is taxable on the state. What, Chris?
I was going to say, speaking of Social Security, someone texted in, if you pay less on FICA tax, then you cheat yourself on future pension. How are you ahead in the long run? This is going back to our taking your expenses, taking a reduction in your pay.
Okay,
to get,
but the bottom line is, if Social Security is there when you collect, number one. Number two, if you're paying, let's say that on $10,000, $1,500 isn't going into there. It's such a small amount of money that you wouldn't get paid at the back end. I would rather save $1,500 for 10 years, which is $150,000, because of maybe $30 or $40 I wouldn't get in Social Security. And the thing is, I'm alive now, so.
I mean, that's a really good text question. That's a really good one, though.
Okay, I'm Esther Gulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we're talking about making money where the sun shines, and that's things that you can control. How does your credit look right now? Have you taken the time to pull your credit report? Are there any errors? If there are errors, you can correct them. Right.
And I can't tell you how easy it is. I was paying my bill online for one of my credit cards, and it just said, click here to find out what your credit score is. So all of the credit cards have really opened it up so you can very easily check your credit score,
Well, it's not even just your credit score. When you look at it, it says there's a 30-day late, and you say, I've never been late. Mm-hmm. And you take a look at it, and I can tell you on my own situation, I found out that we send 2 or 3 car loans together, and what happened was the credit bureau posted all 3 car loans to one and made the other 2 delinquent. And I said, wait, I called them up and I said, what? We sent in all 3. Oh, we made a mistake. So then they corrected it. But it can negatively affect your credit, which negatively affects many other things like car loans and your home, your insurance, because all these people look at your credit score when they're quoting insurance rates.
Mm-hmm. Yeah. It could even affect jobs, because I know jobs are looking at credit scores and all that too. But also, don't just look for. How about looking to see if there's a credit card open that's not you didn't open?
Hello, did somebody open up a credit card on your behalf and they're using it?
Yep.
And that's the only way you're going to find it is when you pull your credit card. The other thing is you need to take a look when you're looking at credit. What interest rate are you paying for loans? You might have a 6 or 7% used car loan, but you know that you can refinance with the Pentagon Federal Credit Union at 3.74% on a used car loan. Now, you don't have to do it, but if you don't do it, you're overpaying. And so you when you're looking at how to do better financially, and you won't reduce your car loan rate by 3% because you really don't know what to do, you've just shot yourself in the foot.
Yep.
Yep. Even with credit cards, they have all these fine
0% credit
right.
cards.
But I was going to say, if you miss one payment, your interest rate jumps from 12% to 28%. Well, that one credit card may have 28%, but if, like Esther just said, if you could get a 0% credit card, roll everything over to that 0% and close that.
Here's the thing: if you're a senior and you say, "Yeah, well, it's good for you to say because I don't know how to do that," we will help you. This time of year, we have much more time to talk to people, to show them where they can get the 0% credit cards. You can do a balance transfer from an 18 or 25% credit card to a 0% for 18 months. Look at the money you save.
Yep. And then not to mention, Esther, I have many clients who are like, here, put my tax return or whatever have you on my credit card because I'm getting it for a new car or airline mileage. There's a lot of other benefits and perks to the credit cards, and so you really want to take your time and investigate it.
And there's some people that are kind of, what would you call it, bullheaded. I'm not going to use credit, not me. No, I'm going to, but the thing is, if you're that kind of a person that's very diligent about credit, use it to your advantage. You probably have a very good credit score, and you can use it to your advantage to maybe pay off your home, pay off your car loan, get a much lower rate. There are so many advantages that you can get if you can get a 0% credit card and do balance transfers.
Yeah.
And the other thing is that people don't realize that credit is going up. The cost of credit is going up. As interest rates go up, the cost of credit is going to go up. And so now is the time, not yesterday, not next week, next month. You can only do with what you know, and credit, the cost of credit is going up. I don't think people even realize that you can get like 2.2% on a 1-year CD 2.2% on a 1-year CD. So if you are getting 0.5% on your CDs on your local bank, go online, bankrate.com. 1-year CDs, 2.2%.
Yep, I think the ones that don't have brick and mortar, standalone buildings are the ones that offer better rates.
And again, if you don't know how to do it, EG Tax knows how to do it. There's no charge to help you. Come on in. We will help you so that you can get the biggest bang for your buck, because we're not just about taxes. While we're about taxes, we're about your overall financial picture. Right?
Mm-hmm.
I'm Esther Gulius, the tax lady from EG Tax, 8030930. 8030930, star 930 on a cell phone. Before we break for the news, the other thing is taking a look at the cost of your mortgage. Make sure that if you have a 7-8% mortgage, do the refi now, because interest rates are going up. You should maybe think about selling your personal home. Wouldn't that be a great thing, Chris and Tiff?
Definitely. Why? The tax-free money. Right now, 2 out of 5 years you live there, it's tax-free as long as your gain is under $500,000.
You don't have to buy another house. We're going to take a short break. We'll be back on the other side of the news. 8030930, 8030930, star 930 on a cell phone. I'm Esther Gulius, the tax lady. See you on the other side of the news. Esther Gulius, the tax lady. Happy Cinco de Mayo. Happy whatever horse race is going on.
Kentucky Derby.
I got my hat out. My hat is my big.
Your bonnet?
My big hat with feathers on it.
Since we weren't allowed to wear a bonnet during Easter this year because it was so cold.
Right. No, that's true. Who can wear a bonnet this year? I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. And we're talking taxes, we're talking money, but mostly we're talking about what do you have control of right now that you can improve? Because, a little improval here, a little improve.
A little dab here, a little dab
all
there.
All these things add up. If you can drop your mortgage payment, if you can drop your credit card payments, if you can put yourself in a better financial situation at work, if you can drop your car loan interest, those would require you to think about it and make a commitment to make that change. Sometimes it's as simple as just sitting down at your computer and doing the refi. But more than anything, if you're maybe a senior who's not so computer literate, EG Tax will help you.
That's right.
We love to help you. So talking about, again, 8030930, 8030930, star 930 on your cell phone, selling your personal home. People don't know that if they sell their personal home that they've lived in for at least the last 2 years out of the last 5, all the gain up to $250,000 or $500,000 filing a joint return is tax-free. Mm-hmm. So you can get that money and go down to Mexico on Cinco de Mayo and just have a good time and never buy another house.
Yep, that's what I was going to say. A lot of people think that there's a time where you have to go and buy another house because that was a long time ago, the law, but that's not the case any longer.
That's exactly, well, that has been a long time.
Long time.
So that's and I will tell you the need for housing in Western New York is really important. I mean, you can't believe some people might have 14, 15 full offers, and people pay $20,000, $30,000 over asking. This is the time. They say make hay while the sun's shining. This is a great time to list your house and sell it.
Yep, the market is incredibly hot. The interest rates are still really low and competitive, and so hence a good time.
And it's a great time to downsize. Maybe you want to buy a house in Florida, a second house up here. There are great options. You should look at each other driving the car and say, honey, we should do that. You really should. Nothing like now. The other thing is,
you're going to get a lot of wives mad at you because the husband's going, see, honey, Esther agrees with me. We should buy that house.
You really should, especially after last winter, which can't really let go of Western New York. How about if you have a rental? maybe you have a rental 2-family house, 4-family. You can do an exchange and take the equity out of that rental and exchange it for a piece of property, maybe in a better climate. And it's like a win-win situation. You don't have to pay the taxes. It adjusts the cost basis onto the new house. You don't have to pay taxes. It's just like, duh. Mm-hmm. Right? Mm-hmm. So, and again, we use our friend Russ Gullo, who's the exchanger.
Right.
So, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. And we have Tony or Carol first?
Carol first.
Hey, Carol. This is Esther. How can we help you?
How are you, Esther?
Hi.
You have been a godson.
Thank you.
I am 68, and I have learned how to leverage my money.
Atta girl.
Listening to you, and I appreciate it. My question is, you had mentioned the Pentagon Federal Credit Union.
Right.
Is that a website?
Yeah, penfed.org.
What is it, Pen?
penfed.org, and they have interest rates of 2.84% on CDs and 3.74%. And by the way, this is, they're not paying me to say this.
I know.
Just because it's really good.
Well, what I was going to say is you always, whatever you say, you practice, because I know you have a car loan through PenFed,
I
Esther.
have like 5 car loans.
Yeah,
through PenFed.
yeah.
They're really a great I have to tell you, proving that you own the car and the title stuff is not easy, but the rest of it is great. The rates are remarkable. So if you have like a 6% car loan, check with PenFed. You can. I think it's like $25 to put money into a bank account there, and then they're great to deal with. And those of you that have PenFed, you know what a great company they are to work with. So 2.84% on CDs, which is pretty darn good. And 3.74 on used car loans on a refi, so you can be refinancing your used car loan.
And Carol, it's so awesome to hear you say leverage your money. I mean, in my thoughts, we work really hard for our money, and it's important to do the right thing and make wise decisions.
Because what you don't spend, if you don't spend it, that gives you more expendable income, and you can do much more better things with it, right?
Oh, I can't tell you. I maneuver it constantly.
Good for you. Good for you.
Do they do?
Thanks for calling.
Oh.
Have a great day. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on your cell phone. We go to Tony. Hey, Tony, how can we help you?
Hello?
Hey, Tony.
Hi. I got a question about Medicaid.
Yeah.
Do you guys help set up Medicaid?
Well, we don't set up Medicaid. Medicaid is, it could be because you are low income and you need Medicaid to pay
Are you
for
talking
nursing
for
home.
for health insurance?
Health insurance.
No, just for
Health insurance?
She's eligible for Medicaid.
Yeah,
So
we
is
do
this
that.
for health insurance, Tony?
No, right now she's under my plan.
So is she a low-income person, or does she make...
Yes.
So how old is she, Tony?
50.
Okay. So you're not married to her?
Yes.
You are married to her. And are you a low-income person as well?
No. Yeah.
Okay.
But she's disabled. She gets Social Security, only $4,000 a year.
Okay. So she's on Social Security disability.
Yes.
Okay. So you want to know if she can get on Medicaid?
Yes.
So do you have health insurance through your employer?
Yes.
Okay. So because you're married, there is special rules, and her Medicaid eligibility would be tied to the family income. So, but we can put her into contact with Tim, right? Trish?
We can, because there might be an option like the essential plan, and Tim talked about another plan the other day that was only $44 a month.
Oh, that's with the dentist. And
No.
Oh.
He
But
said he's
anyway,
got to look into it.
What I'd suggest to do is talk to Tim. There's no charge. Our phone number at the office is 632-7886. Tim Eliason is our healthcare navigator, and if anybody can get her to qualify for Medicaid based upon the lower income and her disability, it would be Tim. He'll be very happy to help you, okay?
All right, thank you.
Thanks,
All right,
Tony.
thank you.
Enjoy the sunshine.
That's for sure. Sunshine makes you feel good, doesn't it? I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on your cell phone. Okay, so other ways to make some money. Sell your stuff.
Yup.
So, one of the things I love to do when I go to work in the morning, I drive by houses and I see all the things sitting next to people's houses. Their RVs, their boats, their collectibles, and some of these RVs and boats haven't been moved in years.
But
People are making payments on them. So one of the other things that I suggest is sell your stuff.
Yep.
Sometimes you're just emotionally attached to it. But if you sell it, you can pay off the loans, and you're not using it anyway. So, it gives you the opportunity to free up some cash.
That's right. Or even there's all those stores nowadays where you can hand in your clothes and get money for your clothes and things like that. And I think that's a really good opportunity too.
You mean from a tax deduction standpoint?
No, there's like Plato's Closet,
Clothes Mentor.
And the resell.
Yes.
Okay.
Yeah.
But the whole thing is take a look at what's in your world. And if you got an RV, a boat you're not using, maybe you got tools from your spouse who had passed away, collectibles, turn them into cash and take the cash and pay off your loans and debt.
I know,
Or
Chris.
use them for investment.
Chris and I, when we got our new house a few years ago, we had a swing set in the backyard, and we used used Let Go, and we sold the swing set, and we sold something else too, or the refrigerator.
And what's so great is you can, and that when you sell those things that have depreciated in value, it's tax free.
Yep, and we sold the refrigerator and the swing
and really,
set.
All it is getting off your fanny and doing it.
That's right.
So look at yourself in the mirror and say, "I'm going to get rid of my junk."
I'm moving my fanny.
Move your fanny and get rid of your junk and take that money, pay off the loan, and move forward. All right? I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. And we got Lynn. Right?
Hello?
Hey, Lynn, how can we help you?
Yes, I understand about the change in the home equity interest deductibility, but how does that apply to any balance you already were carrying?
Well, it's your loan is deductible if it was used to improve or was tied to some kind of improvement to your personal home. Okay, so if it wasn't, if you just took out a home equity credit line and paid off credit cards, it's not going to be deductible, and there's nothing. They don't care that you're carrying a balance.
So if you have a balance previous to the change in the tax law, you would have to prove that was...
It's not deductible. There's nothing you can do about it.
Well, if you used it for home improvements, the home equity, then you could deduct it.
Only if the home equity was a result of you remodeling your home or taking care of some type of new roof or something but if it was to pay off credit cards, which is not related to your home, but you did a home equity to do it, it's not deductible and there's nothing you can do with the balance.
Does that make sense, Lynn?
Well, I get that, but I mean, I had the home equity line of credit.
But what did you do with it?
And I used it in 2017, prior to the tax.
And what did you use it for?
What did you use it for, Lynn?
Various things. So I would have to have the proof that I used it for even before the tax law changed.
Right. So that's correct. So if you, and again, right now, it's really interesting because all the stuff that I read, everybody, the IRS is kind of in a quandary too. They're not sure exactly what they meant when they changed these laws. But what we got a few weeks ago was if you used it for your home, then it would qualify for deductible interest. So you're going to have to kind of go back and see what you used it for. If you used it for non-home, personal home expenses, it's not going to be deductible.
And you ask a really good question.
Yep.
Okay, well, thank you very much.
All right, thanks, Lynn. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. We're going to take a short break, and we're going to be back on the other side with your questions and calls. Hey, give me another margarita. This is Esther Golias, the tax lady, Happy
Frank's
Cinco
saying
de
yes,
Mayo.
please.
Yeah, right. Happy Cinco de Mayo. And we're talking taxes and money and things you should think about that people just, it just escapes people some of the details, and some of the details really end up shooting yourself in the foot. Too high of mortgage rates, too high of a car loan, you haven't pulled your credit report, you're making payments on an RV you use once a year. One of my friends has this lovely RV, and they pay $1,700 a month for this RV payment, all right? And every time I'm with them, I go, you're paying $20,400 a year for this RV that you use 1 week a year. I said, you can rent a heck of a chalet for that $20,400, plus the value of the darn thing is going down. So they finally got it. And they said, you know what? We're going to get rid of the RV. But really, that's what we do. We get stuck with having the stuff, and the stuff is doing nothing for us at all. And part of what we listen to people during the year, they'll say, how can I do better? Well, some of the things to do better means that you just got to look at what you're doing now.
That's right. Absolutely. Just stop and examine and sometimes an outside perspective. I know.
And you know what? Make yourself a goal. Like by Wednesday of next week, I'm going to do da-da-da-da-da-da-da, right? Get it done. The other thing is, how many people don't have wills? It's hard for me to believe, but one of my clients, wonderful person, passed away and was an attorney, and he had no will.
Wow.
Can you believe that? An attorney with
No.
no will.
Because they're going to do it. They're going to do it, and then it's too late.
The emperor with the cobbler with no shoes. Your estate planning.
And then
now is the time. Get together tonight while you're having your margarita and say, you know what, honey, we got to do this.
Yeah, and then Esther, also, as your life changes, you really have to update your will too. So you want to make sure sorry to step back, but you want to make sure you do that
right.
too.
You're exactly right. And the other thing, look at your investments. How many people never open up the statement they get every month from their financial advisor?
Mm-hmm.
They don't know what they're doing, what the return on investment is, what they're charging them. And again, that's something that EG Tax will help you with. You can make an appointment, there's no charge, and we'll go over everything and show you how to read it.
And, speaking of that, that's another thing not deductible.
That's
going forward.
Is your management fees of your financial accounts.
That's exactly right. Exactly right. The other thing is, take a look at your monthly expenses. What are you paying for your house payment or rent?
Mm-hmm.
Some people are living for their house. And maybe that's what you want to do, live for your house. But I will tell you, from a financial standpoint, it's best to downsize and get to the place where you can afford it so that you can move forward with your other investments. To be house poor usually means that the house is falling into disrepair. Another one of my clients is living in a house that they can't afford. And so they're making the house payment, but their roof has a hole in it, which is making the rafters bad, which is making the drywall rot. And, had they just made that decision, so much of this is just a decision. Make a decision to let it go.
Right.
I guess that's why they have that website, Let It Go, right?
Let it go. Let
it
go.
go.
Yes,
Right?
I like that. They have great commercials.
The other thing is, Airbnb is an absolute, can be a gold mine for people. Do you guys want to explain what it is?
Well, it's a bed and breakfast. It's where you can rent out a room in your house to someone for a week, for a night, for whatever. And
so how do you get
there's a website, the Airbnb website, and it's a really easy process. You just follow the prompts and you plug in what you have, and presto, you're on the website, and
then
just
people start emailing you and say, yes, I'd like to stay at your house. So you'd think about Western New York. We're close to Niagara Falls. There are it's a great tourist destination, and some people prefer to stay in a local home. And the rents are great. So one of my clients making $25,000-$30,000 a year, renting out a room to really nice people. I asked her if she's worried about axe murderers. She says no, she's not. So far, they haven't been chopped up. But I mean,
and then we also have lots of colleges and universities, and there's people graduating all the time, and so people come into town and they just need a place to stay.
Right. So you go to Airbnb, sign up, and you can make some extra money to mitigate some of the expenses from your home.
Mm-hmm.
Right.
That's right.
Other thing is utilities, cable, and phone. I can't tell you how many people still are paying the phone company for a phone.
Right.
You know what I mean?
Oh, yeah. But as I do people's tax returns, I always update their information, and they're like, nope, got rid of the home phone. And I've had that conversation.
You can keep a home phone.
Right.
It doesn't have to be through the phone company.
Well, I've had that conversation with Chris, and he says it's actually cheaper for us to have a home phone than to not, because just like you said, Esther, we have it bundled. Right,
okay,
Chris?
but that's different. It's because it's part
Right.
of your cable bill. But there are people that are paying like AT&T $100 and some a month for their phone.
Mm-hmm.
And the other thing is, if you're a senior, you can get a lower rate.
Yes.
On a phone, on your phone usage. So again, that just comes down to making those decisions so you don't have to pay the expenses. We talked about the car.
How about,
and again,
you know, and the thing that everybody uses every day nowadays is your cell phone.
Right.
Look at your cell phone plan. Are you with the right carrier? Should you change your carrier?
Right.
People,
don't you think that people feel so confused they don't know who the right carrier is?
Yep.
And sometimes they're just so overwhelmed they say it's just easier to pay an extra $30 a month.
Yep. I mean, especially you look at the commercials out there now. One of the guys that used to advertise for a big cell phone company now advertises for a little cell phone company.
Right.
And you could see someone's mind go, well, wait, I switched because of him. Now do I have to switch because of him again? Or do I,
Right. Well, like you said, 97, it's 97% as good as the other phone companies.
Coverage.
So for 3% are you going to overpay? That was the whole thing. The other thing is eating out. And going to get that latte, Tiffany, and going to buy coffee all day, Tiffany.
Me?
All those kind of things, all that money adds up.
Yep.
Right?
Yep.
Tiffany?
Yep.
So
Correct.
That's all she's going to say is, yep.
Are you
yep.
going to stop, Tiffany?
Nope.
See, and that's what happens is people say, oh, that's really a great point, but I'm not going to change. Well, then
I've tried.
And then the last, before we get to Bob, withholding at work. If you really want to send a lot of your money to the federal government and then sit around and hope to heck they pay you back, and you want the state of New York to keep your money until you jump through 12 hoops, then go ahead and keep your withholding the way it is. But if you want your take-home pay as you earned it so that you don't get so much money so that they don't hold it and give you a hard time when you're asking for your refund, change your W-4 at work.
That's right. My gosh, what's going on right now with New York auditing or asking for proof of withholdings, and then you have to wait a couple of months after you get it to them. That's a prime example.
I know just the other day or a week ago, I got a letter saying, please send us your W-2s. And today I went into the mail and Tiffany got a letter.
Oh, you didn't?
I did not tell you.
No.
It said, please mail us your W-2s. So it doesn't matter.
This way they can legally hold up your refund till
Yep.
July or
So
August without
cute.
paying you interest because they say that they're doing a
Service.
Audit.
processed audit.
Mm-hmm.
And I'm going to tell you, if you're sick of it, we're sick of it, just change your W-4. EG Tax will help you. The other thing is, are you making yourself poor? You're sending your money off to them, the federal and state, and then that reduces the amount of household income that you have so that you can get the great big refund at the end of the year. And so as a result, you're charging and using your charge cards and paying 25%. Think about it. That makes no sense.
Yep.
I mean, I know it's what you're used to, but, change can do you good.
That's
I
right.
think there's a song, A Little Change Would Do You Good. I think there's a song to that effect. Anyway, let's go to the phones, and we got Bob from East Aurora Holding. Hey, Bob, how can we help you, sir?
Hi, Esther. Thank you for taking my call.
Yeah.
My question is, I have a dad who just cashed in his annuities. They're like 14 years old, and he made basically $80,000.
Okay.
Over a period of 14 years. My question is, in his income, his basic income with his Social Security and his pension is right around 30,000.
But now he's got the 80.
Yeah, exactly. And he's going to take a hit on the taxes. I mean, really, he's 85. He wanted to get out of it. It's going down, you know. And is there anything that he can do to defer some of that?
Nope.
No.
When he took out the whole thing, if you're saying 80,000 is the appreciation, it's going to make his Social Security 85% taxable as well. So he's going to get a double whammy. If you want to give us a call, we'll tell you exactly how much he should set aside for estimates so he'd know in advance.
Money to pay it, and that's what he already knew this. He knew it had been.
And Bob, to reiterate what Esther said, it's only the growth on an annuity. It's not the principal. So that 80,000 is the growth, right?
No, it's the growth. That's correct.
Yeah. Then it's going to be taxable plus 85% of Social Security. So if you need help, let us know. Okay.
All right.
All right. Thank you, sir. And finally, we got Rob. Hey, Rob. How can we help you, sir?
Well, I wound up having a life-changing situation. I wound up getting hurt through work.
Okay.
And the only money that I actually had in my deferred comp is all I got that I had to pull out because it seemed apparent that it was going to be too much money trying to.
How much?
In the end, that I wasn't really making, and I'm trying to find out what I can do.
How much, Rob?
Technically have, because I don't know where anything's going right now.
How much, Rob?
On other income. Technically, I probably don't even have about $6,000.
No. How much did you take out?
I took it all out, and it was
how much, Rob?
$800, and then I had to pay the taxes on it.
How much, Rob? How much did you take out?
$9,800.
$9,800, right? And this is your only source of income?
No, I'm a U.S. Army retired veteran.
Yay!
So
thank you.
You're a VA pension, right?
What I make as far as a pension from that is my only other source of
income.
income.
So you have a VA pension, right?
Yep. Rob.
So basically, Rob, it's not going to cost you anything because there's an exception to penalty because you're disabled. So you're not going to have to pay any taxes on it.
You're going to be okay, and thank you for your service
Amen.
above all.
That's for sure.
Thank you. I'm just.
All right, thanks.
You want hold on, Rob.
I'm Esther Golias, the tax lady from EG Tax. If you need tax help, if you have letters, if you want to come in because you want to rearrange your finances, there's EG Tax is there 9 to 5 Monday through Friday. If you need us on our website, egtax.com. Until next week, I'm Esther Golias with Tiffany Fabian, Christopher Fabian. Have a great week. Enjoy the sun. Bye-bye.